It is a Sunday afternoon with the time change about 3 o'clock, and just want to take a really quick look here at where the markets ended, looking at a 5 minute chart, maybe even a 2 minute chart on the Dow, on the S&P, and NASDAQ. I want to look at where things ended at the very end of the day on Friday and what that might mean for early Monday trading. I also want to ask you if you want to read a kind of a funny and interesting opinion piece that I wrote this afternoon. That will be at my website in the opinions section. Those who know me know I am not short on opinion. So go check that out. It's an interesting read, and it kind of addresses some of the ridiculousness of how some people are reading this market. So go check that out. It's in the opinions. And anyway, let's take a look at three real quick charts again from freechartvideos.com using time-honored techniques to understand modern markets. I'm going to encapsulate this. Don't take my word for anything. You know, folks, I'm not perfect. I could be wrong. I could be real wrong. But I'm just using simple, tried, and true methods. Nothing fancy, nothing esoteric, no Hindenburg omens of death or anything like that. Just looking at the chart, where have we come from? Where does it look like we're going? And folks, I'm just reading it the way it's written. That's really all I'm doing. So I'm hoping you get something out of this. If you are, go by the website. Support what I'm doing there, and also tell your friends, colleagues, and fellow traders. Let's look at some charts. First off, in the Dow, again looking at the big picture, we are well over the previous highs in April, set in late April of 2010. This is a significant move. There's a chance for a pullback here because we really are kind of at the top of this trend line. But I've seen some strength in the S&P that leads me to believe that the S&P, it may run up a little bit more on Monday. Famous last words, perhaps, but let's zoom in on this. This is what I'm seeing here. I'm looking at a 2 minute chart, and I noticed this kind of developed all last Friday. And again, this is a bullish pattern here. The only thing that you have to be careful of when you get these little pennants is a lot of people will say the minimum you should expect out of them is a retest of these highs. And for right now, at least, the Dow Industrials is kind of at that level. Whether or not they're going to break up out of the top of the channel remains to be seen. I'm playing Monday kind of close to the vest as it relates to the Dow Industrials. Let's look at the S&P. S&P, we got the same thing. We've got this same little pennant, a little bit flatter bottom, and then late in the day, it broke out. We are also above the upper trend line that has been working for a long time. So we ended the day a little above that. And again, this line, it's hard to draw it perfectly because the peaks don't all line up just right. So, you know, it may be that some person says, no, that's not where the line goes. The line really goes there. And that could be. In which case, we went above it, we came under it, and then we're retesting it. So, still, I am targeting 1240 to 1250 based upon the inverted head and shoulders pattern. The same one that we looked at in the Dow is operating in the S&P right here. Let's look at the NASDAQ. Here's where it gets kind of interesting. Looking at a 5 minute chart, the NASDAQ gapped up and held it for 2 days. Again, I don't get a tremendous amount of sense of direction from that move other than it was strong, and the market apparently thinks this is where the NASDAQ should be priced. So where do we look in relation to some larger patterns? Well, we have already satisfied the expected move out of this inverse head and shoulders. Now, a lot of people have been saying that the NASDAQ is something of a leader here. If that's the case, then the fact that this index has made its minimum move, you see, and it's now above that, the fact that the NASDAQ has made that move, I think bodes well for the other indexes doing the same thing. Additionally, we are over that line that was the high water mark of the year set back in April. Watch this gap. It may backfill. Again, I hate to tell you, I can't tell looking at this chart. This looks a little lofty here, but I believe we are in pretty bullish waters at this point, and it would not surprise me if we go on up and maybe test this line. If we back off, well, I can't back off far enough. I really wasn't prepared to look at the long range anyway, so let's not bother with that. But just look at how nicely this appears to have made a flag in this area. If it breaks up out of this, then I would expect a move of about the same distance up. So potentially a 30 or 40, yeah, that's right, 26.16. Call it a 30, 40 point move is potential if this is a flag pattern that holds up. So anyway, that's just kind of what, let's take a look at one more thing. Let's look at the financials. Now the financials present a little bit different story, I think, because they are just now starting to break out. If we look at this IYF, which is the bank's financial sector, we'll see a strong move on a gap up on the 4th, a strong move up in the afternoon, a strong move up on Friday morning, then followed by a tapering off of volume. Now, I'll be honest with you, I'm not as concerned about volume as I used to be because of all the high frequency trading. I think when things kind of go straight up, there's just not enough opportunity for the high frequency trading to kick in, which, by the way, some people estimate is 60 to 70% on average of your daily volume. So what I would be looking for here again, if this is a little pennant and this pennant is flying at half mast, then we may be looking at a strong day in the financials on Monday. So I want to remind you, please go check out the little editorial that I wrote in the opinion section, and visit the site, take a look around, and we'll see you. We don't see you, but I'll talk to you again on Monday. Take care.